Good morning, students. Today we are going to discuss about the topic investment management. It's a specialization subject. In this particular subject, we will be having 5 units. This is the first unit, the concept of investment. In this particular chapter, we will be discussing about introduction to investment, attributes, economic versus financial investment, investment versus speculation, features of good investment, investment process, investment avenues, post office savings, bank deposits, provident fund, mutual fund, and types of schemes. First of all, we will start with the term investment. So, investment, what do you mean by investment, and what are the things to be come under the term investment? So, investment refers to putting your money in an asset with an aim of generating income. So financial investments come in a different forms such as mutual fund, unit-linked investment plans, endowment plans, stocks, bonds, and more. However, the primary goal behind all investment remains the same, that is to increase the value of invested money. So this is the explanation which I has given on the PPT. I'll give you a very brief explanation about investment. Investment is nothing but putting your amount of money with an intention to generate some revenue. So that is about investment. How does investment works? And we need to understand when you are investing some amount of money into some of the investment revenue, how it will work. So investing helps you grow your money, which can then be used to meet your future financial goals. When you invest your money, it is likely to provide you with returns. These returns can either be guaranteed or market linked depending on where you invest your money. With guaranteed returns, the amount you receive is fixed at the beginning of the investment. With market linked returns, you get the option to invest in equity and debt markets. Equity markets have the potential to provide high returns but carry higher risk as well. Debt markets carry low risk and provide a stable return. The longer you stay invested, the higher the return you are likely to receive. These returns can serve as a source of income and help you fulfill your financial aspiration. So when it comes to the investment, how it will work? So when you are investing in the stock market, when you are investing in the debt market, or when you are investing in the bank deposit, how we are going to get the return? That thing we have to understand. Otherwise, learning the subject is irrelevant. Some of the definition we can go through. This is a definition which is given by Ameling. Purchase of financial assets that produces a yield that is proportional to the risk assumed over some future investment period. So this is the definition. I'll give you the explanation of this definition. So this definition says that how much risk you are going to take when it comes to the investment, your return will also related to that. That is the explanation of the definition. And according to Sharpe, investment is sacrifice of certain present value for some uncertain future value. Sharpe explains that so investment is nothing but how much you sacrifice for the time being with an intention to earn something on the future value. That is the explanation given by Sharpe through the definition. Then investment objectives. So there are 10 objectives for investment. There are more than 10 objectives, but we will be discussing only 10 objectives. First one is a return. So when you are investing some amount of money, obviously you will have to look into the return, how much return you are expecting, what type of return you are expecting, etc. So that is one of the objective of investment. Second point is risk. So risk is nothing but the variability of return or the possibility of loss. When you are investing into some investment avenue, the risk appetite or even the risk aspect is there. So your return will be proportion to that risk which you have taken. So when it comes to the investment decision, we have to think about the risk-taking ability of the person and how much he or she can take the risk. Third point is safety. Every investment decision needs to think about the safety aspect. So when you are investing some amount of money into stock market and when you are investing into bank, the safety aspect is entirely different. You can lose the entire amount of money in one day when you are investing in the stock market, but that possibility is not there in the bank. So bank guarantees a return which is safe comparatively. So these kind of aspects we have to think about when it comes to the investment decision. Fourth one, growth aspect or even growth. So everybody wants to get more return from the current investment. So that is what growth. So when you are investing into some investment avenue, the growth aspect also we have to consider. So there are some certain sectors which are emerging sectors, and there are certain areas which are promising areas that we need to think about, and we have to take the decision of investment based on the growth aspect. So, for example, artificial intelligence and robotics, that is the future. So when you are investing into those avenues with an expectation of high return, you may be getting the return on the future. That is about growth. Next is liquidity. Liquidity is nothing but uh, the easiness in which you can convert an asset to cash. Every investor have to ensure the liquidity aspect of the investment, because we don't know when the amount of money needed for our requirement. At that point of time, if the easiness is not there, that will be a burden for the investor. So liquidity we have to ensure. Say for example, if you have 1 lakh rupees, you can't invest the entire amount of money into some investment avenue which is less liquid. You have to invest at least 30 or 40% of your investment amount into liquid assets like bank investment, etc. Next is transferability. Another important aspect have to be considered by an investor while investing investment uh, decision is transferability. When you are investing into an investment avenue, you should ensure the transferability aspect of the investment uh, investment that option. So if that option doesn't have transferability, that also less liquid. So say for example, if you have shares, you have 1 lakh rupees shares, but suddenly if you want to convert that 1 lakh rupees shares into cash, if nobody is there to buy because of some transferability issue, that amount is worthless. So these kind of problem we have to avoid by ensuring transferability of the investment. So but we have stock market, we have debt market, and this market facilitate transferability of investment avenues. Next aspect is tax exemption. In order to ensure the saving habit among people, government have introduced various tax exemption schemes. So people have to invest into mutual fund, then insurance, etc., so that they can exempt their tax burden. So that is actually a very good thing for uh, inculcating the habit of investment. That is about tax exemption. Next is protection for future. So we know that future is uncertain, and how things will uh, fall into place in future. So we have to protect the future by saving some amount of money in the present. So if you are not investing some amount of money with an expectation of uncertainty on the future, that is not a ideal decision. So that we need to ensure. That is about protection for future and hedge against inflation. So inflation is a phenomenon that will be there in the economy all time. Inflation is nothing but the variability, or the inflation will reduce the purchasing power of the people, and they cannot have the same basket of items, the same amount of money. So this problem, no one can avoid, no one can uh, resist. So in order to adjust the inflation, we should get some return which should be adjusted to the inflation. That is about hedge against inflation. Last point is fulfillment of social esteem needs. We know that we are social animal, and we have certain social uh, status. In order to protect our status, in order to ensure our dignity, esteem, etc., we have to have some amount of money to spend. So especially when it comes to the marriage, when it comes to the celebrations, etc., we should show that we have some amount of money. We are also not that bad. In order to do that, we should have some amount of money to spend. That is about fulfillment of social or esteem needs.